So let's talk about the credit, right? So do you all look at just personal credit? Do you all at all look at the business credit, like Dun and Bradstreet, Experian Business? Like,
Yep.
what do you pay attention to, and does the one or the other even really matter at all when it comes to this style funding?
So these are all fantastic questions, and let me just say yes to everything. No, I'm just kidding. But it's kind of true, right? When you work with as many lenders and banks as we do, some are really going to care about a personal credit score. Some are really going to look at that business credit score. Some are really going to look at both of those things. So it really is a scenario where, let me just say this: none of them are going to matter anywhere in terms of getting you approved or declined. Where you will see that really matter, and again, this is not just Rock Financial, this is most lenders these days. Where it matters most, it will be in your rate and term. That's where you'll see the credit really kind of come through, and the quality of somebody's credit really matter. And I'll even say that lenders actually care more about the quality of your credit these days than the overall score, right? If you're somebody who has a couple of late pays, but you got a ton of trade lines and you've had credit forever, that's much different than somebody who's paid one bill on time for the last 90 days. And they might have a higher score because they don't have as much history or as many negative remarks, right? But that doesn't mean that they have a better quality of credit. So credit is one of those things that definitely matters these days, but it's not going to make or break you. For example, there are a couple of lenders on our platform that don't look at personal credit at all. They'll pop the hood on business credit, but because credit isn't necessarily their main driving factor, that doesn't even matter so much to them. They're really looking at your affordability on the loan itself. By taking a look at the revenue in the business and how the revenue works, they'll use that to determine whether they're going to approve or decline you ultimately. And then what that becomes for you is, I don't want to call it a lifeline, but let's call it a trade line, right? Because that's essentially what it is, right? If you're able to go out and get access to funding, no matter where it's from or who it's with, that's what that becomes for you. So as long as you maintain that relationship, essentially you can see some cyclical changes where, somebody's personal credit score might dip a few points the second or third time they borrow from us, but they're able to maintain or get better terms because they've paid off the loans that they've had in the past, right? Even though their credit score dipped, right? Especially right now. I saw a statistic last week that last year at this time, the overall credit utilization across the country was hovering right around 60%. That same statistic right now is over 93%. So what that means is people are using their credit. That means their scores are going down. That means that banks and lenders can't have the same guidelines that they did a year ago. And if they do, they're probably working with a much more limited pool of borrowers, or they're seeing it in the fact that they're not doing as many loans or lines as they once were, right? So I think where we're at right now is banks and lenders know that they have to update with some of these changes, some of these things that are going on in the economy that are outside of their scope. So as long as you can really afford a loan, I know this is a long answer to a decently short.
It's great. It's great.
But as long as you can afford the loan and you have something that makes sense to borrow the money for, we're seeing a lot of lenders, that maybe they had a 650 minimum credit score, but they'll lend that money to the 620 borrower or 610 borrower. Like I said, as long as the quality of the credit is there, they care more about that. And again, then there's lenders on our platform that don't care about credit at all. Right, their terms are different. I'll be the first person to tell you that. If you're somebody that the lender is not going to look at your credit at all, well, then they're going to be a much shorter term than your typical 3 or 5 year term loan. If you're talking like a true term loan type of product or a bank type of product, they're going to want to see bankable type of credit. So it really depends on what you're looking at. And ultimately, what I always say is, what are you using the money for? Because cost is one of those things that you can make an argument. Cost matters much, much more than just cents on the dollar for a loan. Because for a business owner, it could make or break them being able to take advantage of a major opportunity or solve a challenge. Like we've lent money to people in the past so that they can meet payroll for the next couple of weeks while they were waiting on slow paying receivables, right? If you don't pay your employees, they don't show up on Monday to continue working for you, essentially the cost of that loan is irrelevant, right? It wouldn't have mattered if we charged 800% or 9,000%, like a Starbucks cup of coffee. They would have taken the money, right? So the real understanding has to come behind the education as to, hey, why is this the reality of what my options are right now, and what can I do to improve those things in the future, right? Every borrower that we work with, we always try to understand what is their long-term strategy in the business. Do they have an exit strategy for the business, whether that's passing it down to, to the next generation or possibly selling it, right? Unfortunately, when you're an employer and not an employee, it's not as easy to retire, right? So what does that kind of look like? And we try to make sure that we're going to backtrack to whatever that is, right? And get to right now. So whatever we do right now isn't going to hurt you on a long-term plan, right? Like, we want to make sure that what we're doing now is going to set us up for that long-term success. So when we work with a borrower, just so you have a good understanding of what it looks like, anybody who applies with us, they're going to speak with a funding advisor. And basically that funding advisor is going to go over, hey, this is what's going on right now. These are the questions that I'm going to need answered from you to really give you some directed information. And then these are the documents that you're going to need to get me to get what you're looking for, right? And that's kind of what that initial consultation is all about, is really just understanding, hey, this is the business, this is what they're looking for, and this is what they're going to need to get there. Sometimes that planning phase can take a couple of months. Like, I've seen borrowers come to us, and say, hey, I actually am looking for funding to really get going on this opportunity for next year. Well, that's great. Here's what you need to do in the meantime to be in the best position for when that you're looking to go live with that. Or sometimes that's just the process, right? You could be talking about an SBA loan, and an SBA loan that involves some real estate tied to it. Those take forever. Just imagine this: a bank, the government, and real estate all get involved in one transaction, right? You're talking about a lot of underwriting, a lot of title searching, a lot of background that's all got to go on. So with all of these parties that have to play a part into this one loan, sometimes an SBA loan can take you 6 to 9 months to get done. So again, it really comes down to that understanding of what is the person borrowing the money for, and then what are their options, and then that will determine how much credit or some of these other factors really matter. From their industry to their time in business, some of these things are very similar across the board. But when you talk about like an SBA loan or a term loan or a bank loan, they become more and more important and more kind of, I guess, scrutinized, for lack of a better term, because those things are really what the underwriters are looking for. You may get declined just for your industry. I've seen that happen. I've seen people get declined for how long they've been in business. I mean, we've seen people decline for pretty much everything. So when you are applying, you're applying with somebody like us in your corner, at least we know where to go to get the right decision the first time. That's the biggest factor, right? You could go search business loans on Google and you're going to get hammered with ads for days after that. But ultimately, any of those people are going to try to offer you money. What matters is understanding, hey, is this the right option for me, and how can I leverage it to make the most money in my business? Because that's really what it comes down to. Each of us can go get you capital, right? And I'm sure you've got relationships, Ronnie, with other people that could get them capital, right? But at the end of the day, what really, really matters is, what are they able to do with the money, right? And you and I, we don't really know that, right? Only the business owner can answer how dangerous can they be with an extra $50, $100, or $150,000 in their business. And a lot of times the position they've gotten themselves into, it's, hey, I can be pretty dangerous with that amount of money. So that's what we really focus on, is helping business owners understand, how do they take advantage of all the tax breaks that may happen when taking financing? What are the best options? Should I take a loan or a line? Do I need both? Should I look at equipment financing? All of these things are where we really help. And listen, sometimes it's a mixture of all of that. And those are great success stories, right? Where we are able to get somebody cash for their business right now, as well as a line of credit so that they have some flexibility in the future. Any way that we're able to help, though, it could be as little as just sharing some information. That's a win for us, because we're like I said earlier in this, where the financing's best kept secret. So the more we could spread that word, the better it is for us. We know that financing's not an if, it's a when, right? So when you think of financing, we want you to think of rock. And as long as we provide that education, we know you will.